Hello again, everyone. It's Vince Four from tradingwins.com. And in today's video, I just want to take 1 minute of your time to show you exactly how and why you should be using trend lines in your chart analysis. Let's go to a chart and let me show you. Okay, so I've circled a candle here that is a classic hammer type candle if you're familiar with Japanese candlesticks. But I'm going to show you why, if you had drawn trend lines on this chart, why this would have been highlighted as a candle you want to absolutely consider as an entry for a trade. So let's just take our trend line drawing tool here. And what we're looking for are major high and low pivots. The pivots are the turning points, right? Here's a pivot, up here, down here, up here, down here, that sort of thing. And you want to look for the major ones. And remember, when you're drawing trend lines, you're connecting one high pivot to another high pivot or one low pivot to another low pivot. So for example, we'll take this high pivot here and we connect to this high pivot here. You always want to stretch them across, okay? So imagine if, you saw this pivot form, you waited, this pivot was formed, you connected those two, and all of these candles did not exist yet, but you just extended that line, right? And what that line is going to tell you is that this is an area, a level that's going to act as either support or resistance at some point in the future. We then turn our attention to the pivot lows and we take this pivot low and this pivot low. All right. And even if we were just at this point, no other candles had formed yet, what we would do is stretch it out. All right. And you lock it in. And now things look very different when we look at it with these lines drawn. As you can see here, obviously they act as resistance, as support, and so on as they go through. Now, have a look at this move. We get to this point of the line, acts as resistance, comes back, and there's our classic reversal signal where it opens at this level, comes down, touches it, and completely reverses. So in other words, it opened, sellers pushed it down, buyers stepped in right at that level and said, no way, we're going higher from here. How do you identify an overhead target? Well, it's the opposite line. You know that these lines are either going to act as support or as resistance. So if you entered here, you can look for a previous pivot high as one target, hitting the line as a second target, and for your final third of the position, you let it run. Now, what do we do with this information right now? Again, very simple. If we get a close back below that line, a clear move lower, for example, if that's a candle there, we could expect it to come back to this level here. And we know exactly how far our target is away from where we are now and how much profit or risk we'd be taking. And secondly, if it turns around, if this line switches from resistance to support, and we get a move above that line, well, then we're pretty sure it is going higher. So not only would it have highlighted you to this trade, it could be highlighting another trade, either short here or long here. All right, click the follow button and we'll see you on the next video. Take care.